Okay, everybody, welcome. It's right 7:01, top of the hour. We're going to get started. Everybody else will be streaming in here shortly. My name is Greg Maddox. I'm the Senior Business and Exit Advisor for Cultivate Advisors. A little bit of housekeeping. We have a team here that's on the call as well, behind the scenes. They'll be managing the chat and the questions. So we have David, Matt, and Kyle are on here as well. So if you hear those people piping in and talking later, just know that they're all part of the Cultivate team. And you'll be able to hit the chat button and submit questions or answers to questions we pose to you. And at the end, for a bit of Q&A, we'll be able to do it through that. So for those of you who don't know Cultivate Advisors, Cultivate is a business advisory firm that's staffed by current and former business owners. And we partner with founders and owners who have really a strong desire to either scale, sell, or passively own their companies, but do it years ahead of schedule. And in the process of doing that, we focused on creating business owner freedom, both business owner freedom today, but also maximum value when it's time to exit. And we do that through structured collaboration with the entire exit planning team of advisors. So if you're on this webinar, it's because you are a business owner who's looking for structured ways that you could get more freedom in your life. And you also possibly one or two professional advisors who also help business owners in different lanes than us on here as well. The purpose of this workshop series is to break down exactly how we accomplish this. A little more about us. We've worked with at Cultivate Advisors thousands of businesses across North America. We've made the Inc. 5000 4 years in a row for being one of the fastest growing companies in America. We have hundreds of 5-star Google reviews online, and we also have a world-class Net Promoter Score. But the bottom line is that the work that we do to help business owners grow, it's just not theory to us, guys. We actually eat our own cooking. Everything that we do to help our clients grow is the same stuff that we're doing ourselves as we scale our own company to an eventual exit. And in order to create a clear path to an eventual exit, and let's be honest, we're all going to exit at some point, you need to get really clear on why you started your business in the first place. So I'll pose this question to you kind of hypothetically. Why did you start your business? There had to be something that made you decide to kind of take that leap of faith and take on the risk. And at Cultivate, we've asked this question to literally thousands of business owners over the past 7-8 years. And we hear things like, well, I want to do good work. I want to be able to innovate, do things my way. I want to be able to make an impact on my employees, on my customers and clients, on the community that we operate in. I want to be able to be in control of the money that I make. But if we're honest about this, you can do all of those things working for somebody else. So why take the risk of going out on your own? And if I had to pick one word for that, I would say it's just freedom. And you got into business probably to create freedom in your life, but if you've been at it for a bit of time, you've probably realized the irony that the more successful you become, oftentimes the less freedom that you have. Because being an entrepreneur, it's hard work. And it doesn't get easier as your business grows. Actually, we have to get stronger. We have to get stronger as leaders and as builders of people, process, and systems. And any meaningful growth requires going through some growing pains. So let's talk about some of those things. What are some of the big obstacles and problems that all owners face, but not everybody figures out? There's three main ones. I don't care how much money somebody makes, how many commas they have in their revenue line, profit line, or personal income. I've personally had clients doing close to $100 million in revenue, very successful and sophisticated, and have had clients who are in the beginning stages of growing their company and hitting their stride. And what we found is these three problems permeate across most business owners. Number one, you own a job, not a business. So you're probably involved in most, if not every, key decision and relationship. And while this might feel rewarding in the beginning, it eventually becomes exhausting being the center of everything in your business, and oftentimes feeling like you are chained to it, or that the business is running you instead of the other way around. Number two, having all of your financial eggs in the business basket. Most owners that we meet have not been thinking about building an asset. They've been building income. So if you stop, your income will usually stop as well, and your wealth will often come crashing down around you after that. And so in the pursuit of solving these business problems, what we've noticed for a lot of owners, and for those of you who don't know, at Cultivate, we've all owned a business for at least 10 years in the past, anybody who's an advisor. So we know from personal experience as well that when you're trying to solve business problems and there's very little separation between your business life, your personal life, and your financial life, you end up staying up late at night at the office, trying to put out these fires, doing what you have to do to keep the business afloat. And even when you're at home, you might be physically there, but your mind is still really on what I call the mental commute, because you're constantly thinking about the business, you're constantly problem solving. And we've been taught that that's the way that it has to be. But what started off as a business problem, maybe sales were not hitting, maybe marketing wasn't right, maybe we're having problems with capacity and fulfillment, but what ends up happening is it starts to bleed into the other areas of our life. And if we're not careful, it could lead to, severe consequences for us. And this is really how it works, doesn't it? As entrepreneurs, as I mentioned, very little separation. It's a fuzzy line at best between our business, our financial, and our personal lives. So as we work to solve business problems, before we know it, we could end up over-sacrificing, the third big problem, over-sacrificing on the personal, family, and health front. Now, burning the candle on both ends, that works for a period of time. And anybody who's been in business for a while knows that we can all white knuckle it for a minute and lean in when we have to. But eventually, if we're not careful, a wall is going to be hit. And everything suffers, not just your results at work, but your health, relationships. And if you're not careful, you could burn everything to the ground. So the key question is, well, how do we solve this? And I think a big thing that I want you to take out of today's workshop is I'm going to ask you to reframe your thinking about what's possible as an entrepreneur. So let's think about things that are possible for us that maybe we thought was something that would only happen way down the road and very few people could actually achieve. So the first is that you can actually build what I call business freedom. And that's creating a business that produces an abundance of both time and money instead of just owning a job. And if we use some of that time and money and carve off, we could create financial freedom by investing in other liquid and income producing assets separate from your business instead of having all of our financial eggs tied to the business basket. And if you have those first two things, some business freedom, some financial freedom, or if you're on the path to it, you actually can create personal freedom in your life. And that's about having enough time and money to live the life that you've imagined while you're growing the business. You don't have to wait to some future date, instead of living in a world where you're continually grinding it out and sacrificing. The challenge is, how do you learn to have success in all three of these areas? But when you do, when you start putting a plan together that can lead towards business freedom, financial freedom, and personal freedom, you can start living what we call your ultimate exit lifestyle, even if you never sell. But most business owners really fail to create high levels of freedom in all three of these areas. And the key reason for that is oftentimes the advice that you're getting is siloed. So you might have a handful of really good advisors, but they're all operating in their own lane and they're not interacting and connecting the dots for you or with the other advisors who all support what you're doing. And so you never really figure out how to fully get out of the daily operations. Or maybe you never figure out how to reduce your financial dependence on your business, or never fully solve overworking, overstressing, and over-sacrificing. And I think a big key component of that is because you don't have a clear path that connects all the dots in your world as an entrepreneur. And until now, because we're going to share with you exactly what we've done to solve that. In this workshop series, we're going to walk you through the exact steps that you need to take. And you can start doing it right now after these initial workshops in order to create the freedom in your life that made you want to start your business in the first place. And at the end of our workshop series, you're going to be able to take what you learn and really just implement it on your own. We focused on keeping it super simple and actionable so that you could actually take what you learn and implement it in a way that's meaningful in your business or your personal life. Or some of you might want some help to do it bigger and faster with a team like Cultivate Advisors, with a group of folks, current and former business owners who have been in your shoes and know exactly how to connect the dots to get results. So we call our process the Exit Lifestyle Accelerator. And it is really the clearest and most predictable system for anybody who's serious about doing what it takes to achieve that ultimate exit lifestyle, even if you never sell. What I'll do now, let me just quickly walk you through the steps in our process. And then today we're going to start unpacking them. So the very first step, discover your freedom point. That's really to help you answer, what would it take for me to live my lifestyle without the business? And more importantly, step two, what's the business planning required to make that a reality for me sooner than later? And how can I connect the dots there so that I don't have to wait decades to make that happen for me? We're going to go deep on those first 2 points today and walk you through an actual case study of how we do that. And then step three, which is really the first part of our engagement with somebody, is to know your business. So if I know where you're going, the freedom point, which is the value at which you could sell your company and walk with enough cash after taxes, after fees, after any debt, after your percentage ownership, and add that to the pile of resources you have, and it'd be enough to fund whatever's next. If we know where you're going, in order to get you from here to there, we have to understand where here is. And that's what step three is all about. That's for you to understand how a third party, a lender, investor, or buyer would view your company, and understand how they would value things as strong versus weak, so that you could create a plan to maximize your value and do it with intention. Once we get through that and create a very detailed roadmap on how to get you there, the very first thing that we do is in phase two is we coordinate with your tax, legal, and wealth advisors. If you think about this, it doesn't make a lot of sense to spend a lot of time, energy, and money growing the value of your company if life could throw you a curveball and wipe out some, if not all, of the value that you've already created. What we know from working with hundreds and hundreds of business owners across North America is that most business owners are woefully underprepared at the level of planning that they need: tax, legal, financial. And so in phase two, we talk about that. There's a different set of playbooks that are available for successful entrepreneurs that are not available to rank and file employees or even successful executives who are employees of larger companies. And not all tax, legal, and wealth managers are created equal. It's a niche of those folks who understand these playbooks and routinely exercise those plays with their business owner clients. So in phase two, we make sure that you have the right team there and that they're building a plan for you. Once we know that you've got a plan that everybody says works, and you and your family agree that that works, we pivot very quickly into step seven, which is growing the value of your company. And our goal there is to help you maximize your business value without having you work around the clock. And if you think about phase two, that is your tax, legal, and wealth team kind of building a system for you. Well, as we grow the value, when we get to step eight, we're going to talk about how do we leverage your business as a wealth creation tool so you're funding your freedom along the way. You're still growing the company aggressively, but also putting the oxygen mask on yourself and delivering on the plans that you implemented with your tax, legal, and wealth advisors. And when we do that, what we find is that step nine, we're able to cultivate your exit over time. Most of our clients have got a long window. I have clients in the 3 to 5 year range where they're not thinking about selling. We have clients who never plan on selling. They just want to exit operationally. But all of this stuff takes time. You can't do it overnight if you want to do it right and for top dollar. So when we do all of these first 8 steps, it actually tees you up to have lots and lots of options at the point in time when you think you're going to be ready to either step back operationally or actually sell it. Or if life ends up throwing you a curveball, 50% of people who own businesses don't exit on their own terms or timeline, then you're going to be in the best spot possible to take care of your family, to take care of your business, and to take care and protect your assets for you and your family moving forward. So today, we're going to focus on steps 1 and 2. In the second workshop, we're going to focus on step 3, know your business. In the third workshop, we're going to cover all 3 steps of phase 2, protect your family, protect your business, protect your assets. In the fourth workshop, we'll focus on growing your value. That's core to the things that we do at Cultivate. And in the last workshop, we're going to cover steps 8 and 9. So today, I just want to walk you through a quick into the step 1. So you're going to find, this is a cheat sheet, by the way, guys. You will have an opportunity, if you want to get copies of these cheat sheets, at the end of the workshop, you'll have an opportunity to raise your hand and we can send it to you. So if it's either too small to read or you think I skip over it too fast, just know that you're going to have an opportunity to actually raise your hand and we'll get them sent right to you at the end of this workshop. But for every step, I have one of these cheat sheets, and you're going to see that there's a common theme with how we set up these cheat sheets. There's going to be a common set of struggles of why do business owners tend to not have this handled, and then a very clear but simple path, 3 steps on what you can do to help solve it right now. And so when it comes to identifying your freedom point, why is it that most business owners just don't seem to have a grasp on what that number is or what it takes to get there? I think 3 key things. Number one, a lot of people we talk to refuse to believe that their business income is ever going to dry up. When things are going good, we are eternal optimists and we think it will always continue that way. The other challenge, number 2, is that most business owners fail to see the risk of having all of their finances tied to the business. It is your best investment for sure. The challenge is when it's your only investment. And so as long as things are going great, not a problem. But if something like COVID or Uber comes in and kills your taxi cab company, or some type of market shift that you can't control happens, it's good to have more than one horse pulling the wagon. And the third issue is that most entrepreneurs are so busy working in their business that it's really difficult for them to kind of take a step back and figure out how to create an income replacement plan. So there's 3 simple steps, and I'd like you guys to take out a piece of paper or at least think this out right now. And I'm going to explain the first 2 steps, and then I'd like you to kind of put your answers into the chat. We'll keep it confidential. We'll just use your first name. The guys in the back office will help us with that. But step 1 is identify your desired income. So as an entrepreneur, you have a variety of ways that you can pull money out of your business. You could pay yourself a salary. You could pay yourself a bonus. You could pay distributions to yourself at the end of the year or throughout the year. And you can also run perks. So just top line expenses that you don't have to take out of your personal income. And so if you added all of that up, what is that dollar amount for you? If that's not an exciting number, I'd like you to think about what would you like it to be. So that's step 1. Step 2 is you need to calculate the gap. So think about any other income source that you have, not your business, and compare that to your desired income level. So if I have a client who has a desired income of $500,000 and separate from their business, maybe they have some real estate. Maybe they have a non-operating interest in another company. Maybe they have a pension from a previous life, but something they don't have to go to work for. And then for their number, let's say it's 100,000. So their gap is 400. That means that if the business were to disappear tomorrow, they would only have $100,000 of income. So their gap is that 400. And by the way, that's what you should be working with your wealth manager on solving. And the business can go a long way to help you solve that problem. So if you could put into the chat, and David, you could just call out, some of the ranges that you're seeing. What is your desired income? And when you think about other sources of income and subtract the 2, what is your gap? I'll give David a minute to kind of check out what's coming in and give us some feedback.
Yep, we're starting to get some coming in. We're getting a large range here. I'm seeing 450,000, got 100,000. Another 100,000, 250, 750. There we go.
Nice.
600, 350, 325. Ooh, 1.25. I like their style. Very nice.
Nice. All right, cool. So that's great. There's a wide variety. I think that's fairly representative of our client base. So once you know how much you want and how much you can produce without your business and identify that gap, that third step is not as easy. We can't really do it on the back of a napkin, but I'm going to walk you through a tool that we've created that you all have access to if you want it, to actually back into that target sales price. And so let me take you there right now. Give it a second to load. Okay, I've got the case study up. So I'm going to walk you through, I've got some data in there right now, but I'm going to change it up so you can see how this works. And I'm going to base it, I heard a range somewhere from a couple 100,000 up to 1.2 million. So I'm just going to go right in the middle. And that actually mimics a client that we just brought on board here in the past 30 days or so. So I'm going to use, without sharing any details about her or her company, I'm going to share her numbers, and I'm going to help you understand both sides of the conversation that we went through to help her understand this for her situation. So the very first thing I asked her, I was like, okay, so what is your desired income? And she told me it was 500,000. She's been pulling that amount through various sources, but she's like, if she didn't have her business, she would want to always maintain that same level of income with or without it. Otherwise, yes, she could live on less. We all could live on a lot less, but why have all the heartache and sacrifice of growing a business if we can't, build something that we truly want? So let's just put in the 500,000 for her. I asked her if she had any other sources of income separate from it. For her, the answer was no. It was zero. That's the case with a lot of folks. So that means that she's got a full $500,000 gap. If the business stops performing, she doesn't have a cash flow. So first thing we have to do is figure out how much cash would you need separate from your business to pull off that $500,000 a year. Now, quick caveat, this is not meant to be tax, legal, or investment advice. In my previous life, I owned a financial services company. This is back of the napkin planning. We have lots of partners that we work with who are the tax, legal, and wealth management professionals. This doesn't take the place of the tools and resources they have to really dial this number in, but they all concur with the methodology. So the 4% rule is a standard rule in wealth management that says, hey, if you want to be conservative and don't pull out more than 4% a year of whatever pile of money you have, you will never run out of money. And so that means that she would need 12.5 million. 4% of that's the 500,000. She's actually more conservative. She told me to do 3%. So now we're at 16.5. Another way of looking at that is she would be able to fund her desired life without her business when she has $16.5 million saved. So next thing is, well, how much do you have saved now? In her case, she has $2 million saved. That's a great amount of money, nowhere near what she needs. This is a key thing that most business owners need to be aware of, that we have a lot of value in our business and we have a lifestyle need that's pretty high, but we're wholly illiquid compared to the value of our business compared to the liquid money that we have saved elsewhere. So she's done a great job saving a couple million, but simple math, we're 14.5 short. So she knows that she still needs to save this much more or sell her business to fill this gap. So let's be honest, most entrepreneurs are not going to save their way to their freedom point. Their business is going to do the heavy lifting and top that off over time. And there's lots of ways to do that while you still own the company, not just from selling it. So if the business is going to be the main contributor to this, let's talk about what has to happen there. So what's her percentage ownership? She happens to be 100%. Any long-term business debt, that's settled when you close, that gets paid off. She didn't have any, so we'll leave that at 0. So that means we now have to take account for kind of the taxes and fees. I got some hints in here. You're gonna have to pay an M&A broker or investment M&A professional to sell the company. Larger companies, it's closer to 5%. Smaller companies, closer to 10. You're gonna have to pay an M&A attorney and your CPA to get you through it. So a good rule of thumb here, 5 for the broker, 2 for tax and legal. We'll use 7. Now we have to pay, in the United States, Uncle Sam, long-term capital gains right now are 20%. It's not as, that's just federal. You got to also deal with state. That's not as simple as you're going to get. That's all the taxes will be. We bring in the tax and experts and the CPAs to solve this for us. But my client told me to use 30%. So this tells us that she'll hit her freedom point when her business is worth $23 million. If she sold it for $23 million, she could pay these taxes and fees, walk with the 14.5, and that's the exact number that she needs. Now, when she saw this number, she laughed, like many of you might be as well, thinking there's no way in heck I'm going to build a business to that level. Spoiler alert, I've had clients where this number was 4 million and they thought it was too big. I've had clients where it's 50 million. So just know you're in good company if you think that this is, perhaps too big a number to get to. And that's because most business owners aren't aware of the different planning opportunities inside their business to accelerate that. And that's what we talk about in the next step. So, how do you accelerate your results? You need to understand what is it that we can actually do inside of the business to get the value quickly from what it's currently worth up to your freedom point. So again, we have this format. Again, you can have options. You can raise your hand and get this cheat sheet at the end, guys. But number one problem that we see, most business owners way overestimate the true value of their business. It's just natural. It could be providing great income to you. You could have the same industry, the same revenue and similar profit to your buddy who just sold it, and his business could be worth more or less than yours because of the way that you run it. And so a lot of folks don't have a true picture. Beginning part of our engagement, we solve that and we get evaluation done. Number two, most business owners focus on the wrong business levers and metrics. What do I mean by this? I call it business owner math. Most business owners are so focused on chasing income. So I need to add $1 of revenue. I need to add $1 of profit. And they don't understand that business owner math is about multiplication, not addition. So it's the multiples. There are things that you do inside of the business that if we can extract you from being a bottleneck and have it be more people, process, and systems driven that aren't you, that's less risky for the next person. They'd be willing to pay you more. And the way most businesses are valued, it's some component of revenue or profit. We'll just use profit times a multiple. And we're going to get into that in a little more detail here in a second. But so most business owners aren't very clear on, well, how do I move the multiple? I know how to grow revenue. I know things I could maybe try to cut some costs to get my profit better, but how do I move the multiple up? That's an area that we are experts at Cultivate. And the third thing is that a lot of business owners confuse exit planning with actually leaving the business. When the truth is, exit planning is not about getting you and your money physically out of the business at some point in the future. It's really about getting you what you want out of the business starting right now. And it's just good business strategy, good financial strategy, good tax and legal strategy that sets you up to have more freedom today, more protection today, and more choices tomorrow. And then if you ever decide you want to sell, you'll be in the best possible spot. Or if life throws you a curveball, you'll be as protected as you can be. So how do we deal with this? Again, 3 simple steps that you could take and start, implementing in your own business right now. Number one, low-hanging fruit. Can you maximize your profit margins a little bit? Have you ever benchmarked against the competition? Do you know what even average or best in class looks like in your industry or in your niche? That's a great place to start. You might think you're doing poorly and find out that you're actually doing great, or vice versa. You need to know the data. We do that, by the way, as part of our engagement, is we do that benchmarking. Another thing you need to do is pick an exit ready date, I should say. That doesn't mean you definitely want to leave. It just means that how long do I want to take before I hit that freedom point number? How quickly could I do it? Doesn't mean I necessarily want to sell my business at that point in time, but it'd be nice to know that if life or new opportunity came up, or something was, or the market was telling me that it was time to do the next thing, it'd be great to know that I could sell the company for enough and move on to my next chapter. So it starts with picking a date though. And then step 3 is improve the multiples. And that's what we just talked about a minute ago. That's really the key. The magic is in the multiples, guys. The things that you do to implement system, process, and skill up your people and leadership inside of your company is what really accelerates the value of your company. So a picture is worth 1,000 words. Let's go back. Let's go back here. So here we're back at our case study for our client. She had $23 million. That was her freedom point value. And the question was, well, how quickly can I get there? How quickly can I get to that number? So starts off, well, tell me a little about your revenue. She was at $9 million in revenue. So tell me about your profit. This was a down year for her. She was at about $1 million. So relatively low profit margin. Now, most companies trade somewhere between 2 and 6 times multiple. So a multiple of profit. So you take the profit, in this case, $1 million, and if it's sellable, it's a company that's probably worth somewhere between $2 and $6 million. But look, for her, she needs to be worth $23 million. So hence why she laughed initially. She knew that she was at the lower end of this range, like most business owners are. So the question becomes, well, how quickly do you want to hit this number? And what kind of growth would it take to get there? So if we just start with where she's at, she told me she had a 5-year window. She had some health scares that she went through. She successfully beat them, but now she knows she has to get serious and knuckle down. To be exit ready in 5 years was her number. So this tells me if she wants to do it in 5 years, given her current being at the low end of the multiple, her current profit margin, she'd have to grow at 55, almost 56%. So that's probably super unrealistic. I got to go from 9 million, 14, 21, 34, all the way up to 82 million in 5 years. She said, yeah, there's no way I can grow that fast. So no problem. Now we could kick the can down the road is one way, like how long and what's a good profit margin or what's a good growth rate for you? She said, I'm very confident to grow in the low to mid 20s. I've been doing that historically. I can keep doing that. So I just started adding years, and I'm somewhere between 10 and 11 years to get the growth rate there. But that's too long for her. So the next step was, well, have we benchmarked? Is 11% as good as it can get? She's actually, that's the wrong number. This was an off year. We've historically been at 18, and we should be able to get back to that. So I added that in, and now we started having the conversation about business owner math. Even though we can move the margins up a little bit, the real growth happens here when we move the multiple up. And the things that move the multiple are things that just extract the business owner from the day-to-day and put either a system, a team, or a leader in charge of that. And the business owner just oversees it. And so we started moving the multiple a little bit. And I can scale this back to 5 years. Now, 4.5 multiple. For those of you who aren't in the M&A space, you might think that's maybe pie in the sky. No, if a business is doing $28 million in revenue and over $5 million in profit, we can get M&A professionals to line up all day to sell it for $23 million, which is a 4.5 multiple. Chances are, at that level, they would be really attractive to a strategic buyer, which is somebody who's often bigger. And when I plug your thing into my thing, 1 + 1 doesn't equal 2, it equals 3, 5, 7, 10, and they're willing to pay a premium. But I don't need to illustrate that. You know, maybe they will become a strategic sale, but we don't have to swing for the fences. What ends up happening here is to get to this kind of middle of the road where most private businesses end up selling in about that, 4 or 5 multiple range. She all of a sudden the light bulb went off for her, and she's like, man, I know I can do 25% a year in growth. I've been doing that historically. I know I can do 18% profit margins. I've done that in the past. We had this, they had some aberrations the past year to make that smaller. And we talked about what it takes to move the multiple up, the kinds of things that she would have to implement. And all of a sudden she got excited because she's looking at this. Oh yeah, I can grow from 9 to 11 to 14 up to $28 million in revenue over the next 5 years. That actually is super doable for me. And a minute ago, I thought it was totally unrealistic that I would ever be able to grow the value of my company from a couple $1 million to over $23 million. And that's where the light bulb went off. She's like, okay, I understand this, but how do we do it? This was a high level conversation. How do we actually create a real plan to put in place to start going and executing against that? And that's what we do at Cultivate, guys. So pull back up. Now you're probably looking at that and say, well, that looks interesting for her, but what would it actually look like for me? So if you're interested in 2 things, if you'd like to actually have us run those numbers for you, you can text Freedom Point 123 to 312-847-3880. It's not case sensitive, guys, but you do have to spell it correctly and have no spaces. So Freedom Point 123. And somebody on our team will take care of you. There's no cost, no obligation. We'll just have that same conversation with you, but use your numbers and talk about what's realistic for you. If you want access to the cheat sheets that I covered, then just text cheat sheet 123 to the same number, 312-847-3880. Same thing, it's not case sensitive, but you do have to spell it right, and there's no spaces. I'll bring this slide up again in a minute, but I just want to do a recap, and then we'll have a Q&A. Team will stick around for a few minutes after that for anybody who might have questions they want to put in the chat, and then I'll give everybody a chance to have access to get the cheat sheets and the Freedom Point again. So what do we cover today? Number one, we covered the 3 big problems that most business owners face, and that's that I tend to own a job instead of a business. I have all my financial eggs tied up to that business basket, and trying to solve that tends to have me over-sacrifice on the personal, family, and business front. But if we want to solve that, we have to reframe the way that we view what's possible inside of our business. And instead, how can I focus on and create a plan to create the 3 big possibilities, which are number one, business freedom. That's how do I look at my business as an asset that creates time and money, and use some of that time and money from business freedom to create financial freedom. Carve that off with a plan with the right professionals or whatever it is that you want to invest in, real estate, etc. And just invest in other liquid resources or other income producing resources separate from your business, so you have more than one horse pulling the wagon. And let's also make sure that we're focusing on building a business that gives you the time and the life that you want, instead of letting the tail wag the dog and saying how much time or money's left over at the end of the quarter, the month, or the year. Let's draw a line in the sand and say, no, I'm going to build the business differently so that I value my time, and I'm going to make sure that I focus on creating a business that actually allows me to do the things that I wanted to do when I got in business in the first place, which could be, I'd like to see my kids when they're awake. I don't want to always be working around the clock or evenings and weekends. I'd like to be able to spend more time with my spouse. I'd like to re-engage with my friends and maybe some of the hobbies or passions that I used to have, so that I could, have a more well-rounded life, to be more, do more, make a bigger impact. And so in order to do that, it doesn't happen without an intentional plan. And so we shared with you our 9-step process to do that. Today we covered steps 1 and 2. In the next workshop, we're going to cover steps 3, and I'll review that again here in a second. Today we focused heavily on what is the freedom point and how do you identify that, and how can we back into what would it take to support my lifestyle with or without this business, and how could I make my the fact of owning my business or not becomes an option in the future. And then how do I do that in a time frame? Step 2, accelerating results. How do I do that in a time frame around that will actually work for me and my family? And so we explained that. We walked you through the case study of one of our clients and how we were able to give her a roadmap to take her business worth. And when we actually did the valuation, it was worth about $3.5 million. So she was at about 3.5 multiple instead of the 2.5 where we originally estimated. But we gave her a roadmap to go from 3.5 to 23 million inside of 5 years. And she and our team are very clear on what she has to do together with us to make that happen, and together with her team. And so that's very exciting. And then we also shared with you that you could get access to these cheat sheets. And if you wanted to have us run those numbers for you, we could do that as well. So before I bring those text numbers back up again, today we covered steps 1 and 2. The next week, the next session, we're going to cover step 3. Again, that's so you understand what a third-party lender, investor, or buyer, how they would actually look at your business, how they would actually value it, or where they would look for chinks in the armor to devalue your business, either to not approve you for the loan, if you're looking to raise capital for growth, or you're looking for your partners to buy you out, or if it's someone who's coming to invest in you, they would really reduce the amounts of cash that they would invest, or if it's a buyer, they're going to reduce how much money they're willing to pay you. It's better to know these things years ahead of schedule and then create a very specific plan to address each of those in priority order over time. And that's exactly what we do in step 3. And we're going to go deep into that in our next workshop. So the same question, who's ready to actually have those numbers run for themselves? You can go ahead and text, or if you want the cheat sheets, you can text, and we'll open it up now to any type of questions that people might have. You can go into the chat and bring it up. David will will let us know, and the team will answer. Really appreciate everybody's time. If you don't have questions, feel free to take off. For anybody who does, we'll be hanging out here for a few minutes to make sure that we answer any questions people have. All right. Anything coming through, David?
Questions that came through, you already answered in your presentation, so I think we're good.
All right, perfect. All right, guys, thank you so much. We really appreciate everybody's time tonight. We're super excited about walking you through the rest of the workshops and being a resource for you. Have a great night.
Got another question here. What are the industries with the highest profit margins that you've experienced? SaaS for sure.
SaaS, yeah, SaaS.
Or highest
value.
For
sure.
I'm ready to say maybe you were talking like valuation, but yeah, we're getting SaaS, software as a service companies, 30x multiples on a sale. Greg, I think you had a client that's doing $1 million in EBITDA and sold for 30 or 28, right?
Yeah, because they also do a multiple of revenue because of the turnkey nature of software as a service, SaaS, commonly pronounced just a SaaS company. Think of your CRM that you use. That's a SaaS company. Think of anything it's a software that you use in the cloud that you just pay a monthly recurring subscription to. Because of the nature of that recurring monthly subscription that just keeps coming in, they don't have to pay workers to build widgets to deliver. It's basically built. They have to maintain the software, but the huge amount of heavy lifting is done once they set it up, unless they're adding new features, in which case they usually charge more for. So because of that, it's super predictable income. And it's super scalable is the other thing. It's very easy to scale a software across regions, across the nation, across countries. It's a lot harder to scale service companies where people have to be involved in delivering the service, or even product companies where people have to be involved in building, delivering the product. So that's one of the reasons why they get the upside for the buyer or the investor is so much larger for those types of companies. They're willing to pay more. Great question, though.
So there's strategic sales. Other companies buy them and use them. In summary, it's building an app or a program or a software for a larger company where they need it customized and they can't go ahead and purchase a generic software that everybody else is using.
Well, I can give you a different example. So actually, one of my clients is a service company. I won't share any details about it, but it's a service company. He has built, he's really good at what they do, and I can't share what that is, but it's a service company, and he's built a brand. In his niche, he is really well known, and he productized his service. In other words, instead of just saying, we do this type of service, he actually bundled it together, put a brand around it, created a whole process that goes with it, so it's like a product. Because of that, he was just tapped on the shoulder, one of these unsolicited phone calls from an investment group, and we just had the conversation with those guys today, and they're throwing out numbers because it's a strategic. They look at what he's done to build his company, and to them it's strategic. They want to take his brand and multiply it across that niche across the country. And so instead of doing a normal, let's call it a 2 to 5 multiple, or even 2 to 6 multiple on his profit, they're talking 6 to 10.
Mm-hmm.
And it's actually a private equity kind of play. So, which means that he'll sell it. Yeah. So it depends. So there are ways for it to go higher, but it has to do with understanding the right way to build the company in order to make that happen. And even if you don't get that proverbial phone call, when you do that, it actually makes the business easier to run. It makes the revenue more predictable. It makes the profit margins greater because you're the go-to well-known provider of that service, you can charge more. And so even if someone doesn't tap you on the shoulder to say, hey, we'd love to buy you, it just makes owning the company that much more fun and profitable. And it's more valuable when you are ready to sell it.
Kyle and I shared a client. So it's a client I've been working with now. We've increased, value, multiplied valuation for sure. We've done so much into the business and profits are fantastic. He's in Wisconsin, doesn't have the resources to expand. That business can be in every major city in the country. He doesn't have those resources. So somebody else can come there and buy and offer a ton of money because they have the resources to expand it. And so that's another example of a business that would get a higher valuation.
That's awesome. Yeah, great questions. That's interesting to know. Any other questions on there?
Nothing else coming in.
All right, perfect. Then thanks a lot, guys. Super appreciative of your time. We know it's in the evening. We're dealing with multiple time zones. So thanks so much for sticking out with us. And we're excited to continue the journey with you over the next couple of weeks.